This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Herb Greenberg, who reminds investors that risk is real. With Herb Greenberg's Reality Check, researching stocks in terms of risk. You can learn more at TheStreet.com/realitycheck.
Bluest of the blue chips, IBM CEO in a rare television interview says IBM is reinventing itself, changing the industry, and has a plan for growth.
Homefront, did the new man in charge of Fannie Mae and Freddie Mac just make it easier for more Americans to get home loans?
And open for business, small business owners are feeling more optimistic. But does that mean more jobs? And will the economy roar back? We have all that and more tonight on Nightly Business Report for this Tuesday, May 13th.
Good evening, everyone, and welcome. Records fell again on Wall Street today as the Dow Industrials and the S&P 500 each closed at record highs. More on that in a moment. But we begin tonight with the big changes being rolled out at a company that, as much as any, defines the term blue chip. Big Blue itself, IBM, a tech titan you may either own directly in your portfolio or via your mutual funds. It contributed, by the way, not one bit today to the rising market. Its shares were off slightly on a day when IBM CEO Ginni Rometty sat down for a rare television interview with David Faber. The conversation was extended and expansive. And David Faber joins us now from New York City. David, good evening. It was a long interview. I don't think I'd ever seen her on TV before.
In fact, you would be right in that, Tyler. I don't believe she has been on TV, certainly not with us. Almost 2.5 years into her tenure, Rometty has chosen to focus on clients, customers, of course, being those clients, and employees. But she does seem to finally be willing to sort of try and communicate the transition, a significant one that this giant company is undergoing. $100 billion in revenues, 430,000 employees around the world, but not a lot of growth. I asked her, how are you going to get growing?
I think of the areas that's important to think of the word mix. And where we're growing, it's important to grow in the right areas. So around data, 16 billion, up 9%. Around cloud, in fact, we ended last year at almost $4.5 billion, high growth, up 69%, up over 50% in the first quarter. And in this whole area of engagement, social, mobile, and security, because to enterprise clients, this is going to hang in the balance, security. So important to have growth in those areas.
Software sales, an important part of this company. I think $29.1 billion. But again, to this question of growth, which is a key one certainly for so many people. I believe the software business grew 1.4% in 2013. Slower than worldwide software sales, slower than some of your key competitors as well. Do you believe that that is cyclical, or is that something that we can expect to only be a slow growth business?
Yeah. Oh, no. Look, you have to, when you look at our software business, just like all of these big businesses, they contain two pieces of them. They have a piece that is very high growth into these growth initiatives, and then the part where we do mission critical work for clients, these core franchises, which are reinvented. They are a wonderful source of value to clients, profit for us, right, in order to reinvest in the business.
You've been running the company now since January of 2012.
Yeah.
IBM has successfully reinvented itself any number of times. Even, in fact, 100 years ago when Watson Sr. took over,
yes.
I think reinvention
our founder,
even began.
Yep.
It's an enormous organization.
It is.
440,000 employees. What gives you the confidence that you can actually do what you need to do in terms of, to use your word, reinvent?
I have unwavering confidence. It is, to me, is very clear, and part of it is a very clear strategy, and I have got a world of confidence in the people in this company. I mean, this is, at its heart, it's an innovation company. It's not a product company, it's an innovation company. They have reinvented before, we've moved the talent, we've moved the investment, and they reinvented again.
To those who would say, well, why not invest more? Why not do a bigger acquisition? Why not spend even more on R&D to make sure that that free cash flow generation that you're relying on in the future to continue to fuel that repurchase is actually there?
If we needed more, we would invest more in other areas. So I feel very good that we've allocated capital to where it returns, right? And so big acquisitions that don't return, big acquisitions that fail, that's not a good thing to do. And so I feel
do big acquisitions.
We're entrusted.
You do smaller acquisitions.
Yeah, several billions is a big size for us.
But IBM does not do the big acquisition. Why is that?
By design, actually. I mean, and we have done, boy, in the last decade, 150 acquisitions. So we are very much a serial acquirer, but very clear about do them in strategic areas. Intellectual property goes into our global distribution system, so it's very efficient. And we always do them around a core of a strategy.
And of course, they also are doing a lot of divestitures. In fact, $6 billion worth of revenues during Remedi's tenure so far. That will actually be the case when they complete the sale of their low-end server business to Lenovo, Susie.
You know, fascinating conversation, by the way. Great interview. You know, she made a very good case about IBM's strategy. But when you look at her tenure from January of 2012 till now, the stock has been basically flat. It's been the same. How much more patient do you think investors have to be? And what kind of reaction do you think analysts are going to have when they meet with her for Investor Day tomorrow?
You know, I think tomorrow they'll be asking a lot about this 2015 roadmap that they put out there many years ago, and they are sticking to. They will ask many of the same questions we heard during the first quarter conference call about whether they can maintain the free cash flow guidance that they gave going into this year. I also think you'll continue to see these questions about manufacturing earnings, something we talked about. They buy back an enormous amount of stock, repurchases of $8.2 billion, Susie, in just the first quarter of this year. That will slow this year, but nonetheless gives you a sense as to the size that we're talking about. So all of those will be a focus. As for Remedi, you know, it seems as though, I mean, Gerstner came in, it was bad. He made it good. By the end, kind of things were slowing a bit. Palmisano came in, inherited that, and then turned it around. And then by the end of his term, perhaps he handed it to Remedi, hopefully, or at least in the eyes of customers and shareholders and employees, she'll have the same kind of arc to her career there.
David, I want to pivot to something I heard you talking about earlier today, and that is the volume of deals that you are hearing about as you work your sources. Already this year, proposed but not completed. Pfizer, AstraZeneca, not even accepted. Valiant Allergan, GE Alstom, Comcast, Time Warner Cable, and there are others. Why are deals heating up as much? What are you hearing, and where will the deals likely be for the rest of this year?
You know, Tyler, that's a great question, of course, and you're right. We've been waiting for a wave of M&A for many years, and it hasn't really come, given extraordinarily low borrowing costs. What typically is a very positive response from shareholders of an acquirer, meaning the stock price goes up, and, you know, relatively strong equity markets, certainly if you want to use your currency, yet very few deals until now. I can tell you, in speaking to the bankers and the lawyers and other people who work on these transactions, they are as busy as they have been in many, many years. It's my expectation we will continue to see announcements, even perhaps some hostile deals, the likes of Valiant and Allergan, which we don't typically see. It's all about confidence, Tyler. When you get CEO confidence moving in the right direction and a relatively quiescent equity market, meaning not too up but not too down, you start to really lay the groundwork for future deals. And when one company does it, another feels they may need to respond.
And that is certainly inspiring a lot of investors that all these big deals are happening. David, thank you so much for coming on the program. Really appreciate it, and great interview once again.
Thank you.
Well, as Tyler mentioned at the top of the program, the Dow and the S&P closed at new highs, but just barely, with the S&P even topping the 1900 mark for the first time ever during intraday trading. But there was an unexpected slowdown in retail sales in April. They rose only 0.1% last month as consumers cut back on buying big-ticket items like furniture, appliances, and electronics. The Dow added 20 points, closing at, here's the new high, 16,715. The Nasdaq lost 13. The S&P was up a fraction of a point, ending at 1897.
Higher home prices and steeper mortgage rates are being blamed for a weak start to the spring housing market, but relief may be on the way from federal housing authorities. That news sent shares of government-run mortgage giants Fannie Mae and Freddie Mac surging today, while some of the nation's biggest home builders, like D.R. Horton, Lennar, and Pulte, all saw modest gains. Diana Olick explains how some new rules aimed at easing credit restrictions may help some homebuyers get loans and give a boost to housing.
Fannie Mae and Freddie Mac, which guarantee the vast majority of new mortgages, got new orders today that could make those mortgages a bit cheaper for both banks and borrowers.
We expect Fannie and Freddie to take actions that improve liquidity in the present single-family housing finance market.
To help loosen credit, Fannie and Freddie's new regulator, Mel Watt, announced the two would relax certain standards that result in banks having to buy back bad loans. Watt also said he would not lower loan limits from $417,000, something Watt's predecessor had considered as a way to reduce government's share of the mortgage market.
This decision is motivated by concerns about how such a reduction would adversely impact the current health of the housing finance market.
These, in addition to new programs to help some of the hardest hit housing markets like Detroit, are designed to ease credit as all cash investors move out and mortgage-dependent homebuyers move in.
The key takeaway for investors is there's going to be a modest increase in credit availability that's going to help the mortgage market, but I don't think that you're seeing a radical shift at FHFA or at Fannie and Freddie.
In another move to ease credit starting this fall, the FHA, which is the government's mortgage insurer, will lower premiums for borrowers who agree to undergo credit counseling. The FHA, which backs very low down payment loans, lost a lot of customers in the last couple of years when it raised those premiums to protect itself. For Nightly Business Report, I'm Diana Olick in Washington.
So could these new rules loosening credit restrictions really jumpstart the moribund real estate market? And what's the downside to relaxing credit rules? Bob Brusca is chief economist at Fact and Opinion Economics, where he covers the housing market. So, Bob, we all thought that Fannie Mae and Freddie Mac were going to be winding down, not expanding. What's the switch? And is this going to make things better or worse?
Yes, it's going to make things better or worse. That's what it's going to do. I think there is some truth to the idea that there might be some better availability of credit out to certain borrowers, but the bottom line is that the housing market isn't going to be made better really by changing financing rules. It's going to be made better by having a better economy, by having a real low unemployment rate that's created by having job growth, not by having people drop out of the labor force. And you can only do so much with these credit rules. I think at the end of the day, you have to have people that have good credit. And the banks have been concerned because there have been these putbacks from mortgages, and this caused them to be more costly. And so they responded by having higher credit scores, a higher hurdle to get into the market. Well, that hurdle will probably go down a little bit now, but it's not clear it's going to make a dramatic difference.
You know, Bob, a lot of the deals I understand that are getting done these days in housing are all cash deals. Why is that? What does that tell you either about the nature of the economy or the health of the credit markets?
Yeah, the all-cash deals, I think, have been running somewhere a little bit north of 30% of the market. The real problem is that new home buyers is still a very small proportion of the market. New people just can't get into the market. Housing prices are high. And this is the problem. Housing prices were very low for a while and during the crisis, and while that was bad for people who owned houses, it was good for people who wanted to buy them. Well, now that prices have recovered a lot, mortgage rates also have gone up, and that's increased the size of the hurdle people have to go over in order to be qualified to buy a home. So, you know, that's where some of the problems come from. They come from the fact the economy's done a little bit better and housing prices have recovered.
You know, Bob, you said a moment ago that housing will recover when the economy recovers. You know, a lot of people think that if housing recovers, that'll make the economy stronger. Do we have it backwards?
Well, if you've got a big enough tail, it can wag the dog. But the housing sector is far too small to create the growth that will drive the economy forward.
Prices, though, if you look at the Case-Shiller, are actually year over year quite healthy. Is that actually a bad thing because they've gotten so high in some markets that basically affordability has gone so far down?
Well, of course, you still have some markets that are pretty depressed. You know, my hometown, Detroit, has still very depressed home prices, and that's been the situation there for some time because the economy is depressed. In places where the home prices have gone up, it's because they've recovered from these tremendous sell-offs, and now they've gotten back to levels where they're probably normal or maybe even a little bit high. Whether they're high or not depends on what happens with interest rates in the future. If we get some inflation, if interest rates start to go up, well, that'll drive the home affordability indexes down, and it'll cause put downward pressure on home prices. Home prices can be high when interest rates are low. Interest rates are low now, so there's a relationship there you have to keep in mind. Low interest rates are a big reason why home prices are so high right now.
All right, we're going to have to leave it there, Bob. Bob Brusca, chief economist at Fact and Opinion Economics. Thanks a lot, Bob.
Thank you.
And to read more about the changes in the mortgage market, go to our website, nbr.com.
Small business is often called the backbone of the U.S. economy, with more than half of all Americans working for one or owning one. And a new survey showing a 6.5-year high in optimism by small business owners, raising a lot of hopes now for jobs and maybe even economic growth. Hampton Pearson has more.
Optimism among small business owners was at a post-recession high in April, but there's no sign small businesses nationwide are ready to take off. The closely watched optimism index from the National Federation of Independent Businesses went above 95 last month, for the first time since the fall of 2007. But NFIB chief economist William Dunkelberg says it's just a modest gain in a still slow-growth economy.
It's not much of a breakout. As we pointed out, the average of the index going into the recession was, and that's over 40 years, was 100. So we're still 5 points below that mark. But progress is progress.
Among the success stories, Z-Burger. Its 6 locations in the greater Washington, D.C. area have gross sales in excess of $2.5 million a year. More locations are on the way, and just this week, it's added a brand new salad and sandwich section to its flagship D.C. location.
We have a lot of mothers and fathers. They come here, get a salad and a sandwich, and then go over there, get a burger and a milkshake for their kids. So this accommodates their families.
The expansion plans here follow other building blocks for future small business growth nationwide. More than half of businesses surveyed said they plan to expand. Earnings are improving. Small businesses are able to raise prices. And the job creation index is up 3 points.
We've had 7 months in a row where firms actually increased employment on balance, and that hasn't happened since 2006. So we are moving ahead.
3 major concerns face nearly all small businesses: concerns about taxes, government red tape and regulation, and poor sales. For Nightly Business Report, I'm Hampton Pearson in Washington.
Still ahead is another tech bubble brewing. We talk with the big deal makers in Silicon Valley. That's coming up. Victims of Wall Street swindler Bernie Madoff are claiming a lot more losses than authorities expected. The Justice Department received nearly 52,000 claims from people in 119 countries who say they lost money in Madoff's Ponzi scheme, totaling about $40 billion. That's 3 times as many claims that were filed in bankruptcy proceedings for Madoff's investment firm.
French bank BNP Paribas is reportedly in talks with the Justice Department and other agencies to pay more than $3 billion to settle investigations into whether it violated U.S. sanctions against doing business with Iran, Sudan, and Cuba.
A huge settlement reached with Sallie Mae on student loans. The private lender agreed to repay 60,000 members of the U.S. Armed Services a total of $60 million to settle allegations that it overcharged for loans and ignored a 6% interest rate cap required by law. Here's Attorney General Eric Holder.
According to an audit, excessive rates were charged to 93%. 93% of active duty service members who had loans that were owned or serviced by Sallie Mae.
Sallie Mae will also ask that all 3 major credit report bureaus delete any negative credit history entries related to those overcharges and any improper defaults. Coca-Cola is taking a bigger swig of Keurig Green Mountain, and that's where we begin tonight's market focus. Coke plans to up its stake in Keurig Green Mountain, the company that makes a single-serve coffee maker, to 16% from 10%. The move comes after the beverage giant signed a deal with Keurig back in February. Shares of Coke rose a fraction to $41.11, and shares of Keurig surged 7.5% to $119.07. Microsoft is coming out with a lower-cost version of its popular Xbox One video game console. It's going to retail for $399. That's $100 less than the regular device. But the cheaper console won't have the motion and voice sensor feature called Kinect. And it will also offer all Xbox 360 and Xbox One owners access to apps like Netflix without having to pay an extra fee. Shares of Microsoft popped almost 2% to $40.42.
Europe's highest court ruled today that people have the right to be forgotten and that they can ask Google to remove some information from internet search results, like article links with personal information in them. The ruling means that Google will assume the responsibility and cost for removing that information. Here's how shares of Google performed today, up a fraction to $541.54. Shares of Whirlpool tumbled after the government reported that electronics and appliance stores saw sales decline last month. Also, the stock was downgraded by Longbow Research to neutral from buy. The firm cited slowing trends in the U.S. housing market and declining demand in Brazil. Whirlpool shares down almost 3% to $151.55.
Top investors, entrepreneurs, and innovators began gathering today at the VentureScape conference in San Francisco. And as they all look to invest big sums of money in the next new thing, a lot of them are asking whether there may be a bubble brewing in the tech sector. Josh Lipton has more.
Venture capitalists are always on the hunt for the next big moneymaker, and it's here at VentureScape where the pros are talking about their latest investments. VentureScape is a two-day conference in San Francisco where top VCs come together for panels, discussions, and lots of networking. One big topic this year, is there a tech bubble in Silicon Valley? Valuations of startups are rocketing higher. Airbnb and Dropbox are now both valued at $10 billion, Palantir at $9 billion, SpaceX at nearly $5 billion, Pinterest and Uber are both around $4 billion. Despite these lofty valuations, some VCs argue there is no bubble in Silicon Valley. Unlike the last tech bubble here, they say, startups today are real businesses with real revenues.
Back in '99, most companies were going public after about 4 years. Today, that's been elongated to about 9 years. And so you see this in their revenue and their level of maturity. So, average annual revenue for a company going public in '99 was about $12 million. Today, it's about $106 million is what the numbers were for 2013.
Venture capitalists invested nearly $10 billion in the first quarter. That was the highest quarterly total in about 13 years. By sector, the software industry received the highest level of funding, rising nearly 40% from the prior quarter to $4 billion. That was followed by biotech and IT services. Even those VCs who don't think we're in another bubble do say there are startups that will have to prove they deserve those rich valuations.
From the outside, you look at an Airbnb at a $10 billion or a Dropbox at a $10 billion market cap, and you say that there's a lot of room and value they need to build in from a financial metric standpoint.
Bubble or no bubble, venture capitalists are finding plenty of places to commit capital. Only time will tell if they're paying a smart price for their investments. Josh Lipton, Nightly Business Report, San Francisco, California.
And coming up, how Wall Streeters, sports stars, and celebs are teaming up to give back, raising tens of millions of dollars for those in need.
Some of the biggest names in sports and Hollywood made their way to Wall Street today as trading firm BTIG held its annual charity day. All the day's commissions are being donated to a whole bunch of worthy organizations. Bob Pisani was there as some big names chipped in and told us where the money's going.
What would get sports stars Eli Manning, Shaquille O'Neal, Carmelo Anthony, supermodel Petra Nemkova, Dallas Mavericks owner and Shark Tank star Mark Cuban, as well as 50 other stars in a room together in Midtown Manhattan. They're here for the annual BTIG Charity Day, the brainchild of founder Steve Starker.
We're really excited about today. We've raised over $30 million over the last 12 years. 250 charities participated last year, and I think over 100 celebrities over the last 12 years have kind of supported this effort.
It's a simple idea. All the commission money BTIG collects today goes to charity. Each celebrity represents a charity they are associated with and makes a series of honorary trades on the floor on behalf of BTIG clients. The money raised from commissions gets divided up between the charities. Four-time NBA champion Shaquille O'Neal is representing his mother's charity.
She has a charity that's called Odessa Chambliss Quality of Life Fund. What she does is she provides scholarships for young ladies who want to be nurses.
Managing the PR side of celebrity careers, including charity work, has become increasingly important in the age of social media. New York Giants quarterback Eli Manning had one of the worst years of his career last year, but he's still popular with the public.
You just try to be a good guy, and whether you have your best season of your life or a season where you don't do as well, you still want to be nice to people and go out there and work hard.
BTIG is hopeful they'll raise roughly $5 million today for charity. And for all the men and women who work on this floor, the hope is that will counteract some of the negative PR that's been around about Wall Street. For Nightly Business Report, I'm Bob Pisani.
And I'm Eli Manning.
At the BTIG charity event.
What a nice guy he is, Eli Manning. Thank you, Eli. And finally tonight, another big charitable event, the annual Robin Hood Foundation dinner, bringing hundreds of celebrities and Wall Street's biggest investors together to raise money for New York City food programs, homeless shelters, and job training services. Look at some of the people attending. Bill Ackman of Pershing Square in the middle of that valiant fight for Allergan. Jeff Bezos of Amazon. Congressman Eric Cantor of Virginia. And the tennis legend and bad boy John McEnroe. Putting on a nice smile there. Monday night's gala raised $60 million, including $35 million for the American Dream Fund to help new immigrants struggling in poverty. Wall Street giving back.
60 million there, 5 million there. It adds up to big money.
Nice.
That's Nightly Business Report for us. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Matheson. Thanks for me as well. Have a great evening. We'll see you here tomorrow night.
I'm Susie Garrett with a Nightly Business Report news brief. The Dow and the S&P closed at new records today, but just barely, with the S&P even topping the 1900 mark for the first time ever during intraday trading. Investors were encouraged by a new survey showing optimism by small business owners, but disappointed by an unexpected slowdown in retail sales. On Wall Street, the Dow added 20 points, closing at a new high of 16,715. The Nasdaq lost 13, and the S&P rose a fraction. CEO Ginny Rometty plans to transform IBM to focus on cloud computing, data storage, and mobile devices. And federal housing authorities laid out new policies to make it easier for more Americans to qualify for a mortgage, sending shares of Fannie Mae and Freddie Mac surging. Be sure to tune into Nightly Business Report right here on your public television station.